What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for October 4th, 2022. So if that sounds like something you're interested in, consider subscribing because I do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market. So real quick, state of the market. A lot of people may be wondering why the market is bouncing. Again, coming into things, we have not really even bounced. Last week, the only reason we did bounce was because of quantitative easing by Bank of England. Today, you had them coming out as well, talking about cutting taxes and some other potential changes to try to help the growth rate in Europe. Being said, none of this really matters. You're going back to quantitative easing where there's still a big issue on inflation. There's still many different things that need to play out that England just cannot do anything right now. So right now, they are manipulating their bond buying, which in turn is manipulating our bonds. And so, being said, these pushes, in my opinion, you cannot trust because all it's going to take is for us to wake up one morning and something happens to the European financial system and the whole thing gaps down overnight and then just continues to flush. Again, not trying to be bearish here, but there is a lot of really, really bad problems going on in Europe right now, and we can't avoid them. And so typical cycles are throwing a lot of people off. The market should have flushed. But again, the manipulation with Bank of England and talking about the things that they are trying to accomplish to help growth rates, even though inflation is, I believe, at an all-time high for them right now, over 10. We are coming into earnings next week and also have core CPI next week as well, on top of everything. So, normal preparation for these things, we typically try to pump. We haven't even got any kind of earnings pump, and something I've talked about to this point, that we had to do it before the next quarter, before earnings. Because it could be extremely bad. Tesla announced over the weekend essentially that they had good production and good delivery numbers, but missed expectations. And so now we're starting to see those gaps, or those cracks, those foundational cracks, widen even more after Q3. And understanding people may be coming into, I mean, you can try to come up with a thesis trying to explain that, hey, people are that our Fed members may come in more with more quantitative easing to try to help essentially hold up the market. In my opinion, I don't see that happening. I just see rates continuing to get hammered. Powell has already told us this is what's going to happen. We're going to continue to get Fed members this week and non-farms on Friday. Non-farms, in my opinion, aren't really going to matter unless there is a big difference in what is the numbers that are estimated, the numbers that we get. If they're really good, I could see us reversing. If earnings is really good, I could see us reversing. And if core is reversed, there's a lot of different things that need to have a positive sentiment for me to believe that we're going to reverse. Don't see that happening this year. I see if that's going to happen, potentially again March next year, once we hit potentially peak inflation after we get through the winter months. So right now, I think right now there's just a lot of confusion. People just expect the market to just sell off, which it has been to an extent. But today we are still within range. Given we still got about 15 more minutes before market closes, but we are still playing this tight range, and the market doesn't want to break out of here. Is the market waiting on the next core? Is the market waiting on earnings? We do have bank earnings, and the banks have been laying off heavily lately, so we're going to get exposure there onto what to expect coming into the remainder of um, big tech earnings after that. We should have Tesla and Netflix the following week, and then we should have big tech, your Apple, Google, Amazon. All those should be reporting just in about 3 weeks. But we do have something I did talk about in the weekly is we do have TSM as well. So you have semiconductors. We'll get insight into semiconductors rolling into next week. We get a lot of insight rolling into next week. And so my thesis is we're going to try to get some sort of push if we can. Again, we are holding range. I wouldn't be surprised if we come right back down to this 35.92 tomorrow and then pump right back up and just continue to play this range, essentially hugging this line, this 50 EMA line, until we determine what's going on with core and with earnings. Again, there's going to have to be, I think, a big shift in inflation for the Fed to dial back from a 75-point basis move. I don't, again, see that happening, especially with a hurricane. Again, the surge in demand is going to come back into your commodities. And then not to mention that rentals are still sky high. And the average person who could afford a nice home about 8 months ago cannot now. Not even 8 months ago, just even 6 months ago, they could afford a very nice home. Now you'll be lucky if you can afford a shack with the same amount of money you potentially could have had where we're currently standing. So everybody is being forced into having to rent because they can't buy to own. And I don't see that changing anytime soon. And so you're going to have that extra expense there. With all that being said, this week is, again, you don't have a real driver unless something happens with Europe, which I think something will happen with Europe over the next month. That's going to cause us to crack. Is everything, my thesis is everything could potentially play out to where we just finally break the 50 solidly and just purely sell. Again, I think Europe is walking on eggshells, and that could give at any moment at this time. I think they're walking on a false floor, and that will be the thing that just causes us to just sell off heavily. That's the leg I'm watching. Again, trying to be neutral here, but there is no positive side to this. Even if we do get positive data, you're going to get a bit of a rally that's not going to be believable, in my opinion, because you have other things that are on the verge of playing out. This whole scenario with Bank of England is very misleading in a lot of aspects, and I don't think they're going to be able to pull themselves out. I think their whole financial systems is going to come crumbling down, and in turn, again, is going to rip our market down even more than what it currently is. Although when that does happen, I believe we could potentially bottom there. In the other scenarios I've been talking about, could just be smaller corrections if we can start pushing up or grinding up from that point. But I want that next major leg down to be able to see that. There has been a lot of downgrades of the SPX lately. But we have to see. Again, the market is continuing to grind against this. I don't like this at all. The scenario, none of these cycles are normal. Again, the market is very manipulated based on what Bank of England is saying right now. And so that is currently what's driving the market. The dollar is still extremely high. It's still at 111. Again, we need something needs to change. Nothing is changing right now. Again, the bonds have been floating around. Again, being manipulated by Bank of England. So again, watching this zone, the 36.84 to the 35.84. So it is a pretty wide range here. But just realize I think we're going to continue to just hold this throughout the week unless, again, something new breaks, whether that's good or bad. If we get any good news, you got the 200 weekly, which we've banged against and got rejected once already. Could potentially happen again going into the end of the week. And then just continuing to grind out till we get some information that will help us determine where we're at. And that's what's been hard and confusing about this whole thing all year is that we don't know. The next piece of information essentially kicks the can further down the road saying, hey, things aren't getting better, they're getting worse. And then we sell off. And Again, holding that 100 basis point move roughly, that could be priced in. Something I've said through this whole debacle all year is that the market sits around these point basis moves where they think the market's going to be at, and then if the core can give us better than expected drop in inflation, I think we could really rally from that point. But if it does not, if it's equal or greater, the market's going to panic sell because the Fed is just not taking control. That could cause the Fed to go with a 100-point basis move to try to put a chink in the armor of inflation, which again, right now, it is extremely hard, even raising rates at this point, to really do anything. The rates aren't doing anything but just making things even 10 times harder to do it, to get any sort, to borrow money. And so in doing so, it's not helping because nobody's really borrowing money. So how is the market really staying up at this point? You're just deterring corporations to stop borrowing money to expand and grow. Again, which affects your growth rate and is going to hit us dramatically here. Even though everything is fine and dandy, apparently, we will see. We'll see how things play out, and then go from there. So I got for SPX, Bitcoin. Again, there's no point really going over this until the market breaks. This thing is not moving, in my opinion. Again, it's going to look just like the market. When the market breaks down, this will finally break 18K and sell off. Or if we rally, this thing will finally push back up. I think it could potentially hit 25 again and come back right back down. Again, I think the chop to the upside, if there's any push to the upside, it will be chop. And it's not going to be a clear cut like we've seen the past 2 years where it just runs up. That's not going to happen from this point. Inflation just isn't going to go away. So you're not going to get that those crazy bull runs that you got 2 years ago. Tesla selling very heavily down to the 240. I'm still watching that 220. I'll start buying at this point. Again, because they missed expectations. They dumped pretty heavy. So we'll have to see. Wouldn't actually surprise me if they still do very well on earnings. But there's going to be some big cracks. We saw that last. People were dipping into other resources and realizing that Tesla had to sell their Bitcoin, or a good percentage of the Bitcoin, and Elon hasn't told you he was buying back in yet. He said he was going to, but he hasn't done it yet. So he is very, very well aware of what's going on and tuned into what's going on and when he should be buying. Again, he could be buying at any point, but normally they disclose that stuff after the fact, after the purchase. But again, right now, I don't think he's buying at this point. I think he too is waiting for that next leg to determine, okay, this is when I should start buying, because then at that point, you'd be very close to a bottom, and your risk is a lot more limited if we can get one more strong leg down. So I think that's what they're doing when they're waiting for their Bitcoin buy. Again, I think we'll say the 222, if not more. If the market really wants to get crazy, that 50, I think this is actually a 50 EMA down here, not a 20. Is sitting roughly around that 188 mark. So really watching that. Again, if we do break essentially that 210 mark, the market, I think, could float around here. This is where I'm trying to accumulate here in hopes that it does hold there, and then I can keep a tight stop on it from that point. BA pushing up somewhat. It is kind of wedging here for a potential push. It hasn't even retested the 140 yet. But again, the market just hasn't bounced. There's no reason to bounce. We've got continued bad data and information on what's to come. So the market really hasn't been doing so hot in that department in general. Then when you look at JPM, JPM trying to push up. Be nice if we got a retest the 111. Doesn't look like it's going to happen. So it's just like the market's in this tight range. I think it's waiting for earnings. I think we'll determine if this breaks up or down, and then go from that point. Friday non-farms could affect this a lot, potentially, which could make a falsified move on Friday or going into next week, and then seeing where core is and seeing what earnings are really doing. So again, that's pretty much the video. I don't want to make this too long. A lot of stuff I say, I keep repeating myself because of it is much the same. Nothing changes. We're waiting for those bigger events to play out to really determine direction. Yes, there's intraday moves from Fed members, from random data that comes out. None of it matters, in my opinion. Again, there's specific things that are pivotal, and those are the things I watch. So again, Powell, earnings, essentially any kind of core CPI, or if there's any monetary policy. Aside from that, quantitative easing. But from our standpoint, from the U.S. standpoint, I don't believe they're going to be doing any quantitative easing. Powell said we'd see pain, and I believe him in that aspect, that we're going to see a lot more rate raises before things get better, which leads us into potentially 2 to 3 more monetary policies before things do become better. I think we would get to a neutral point, and then once they're done tightening, and then see how the market plays with no raises at all, and then potentially could potentially start dialing back. But they have to get to a point to where they feel like it's coming down enough, or a big enough gap, and then they'll stop raising rates and go neutral and see what the market does at that point. If the market continues to hold or come down, then they will start dialing back. This is a long process. This is not a quick process when you're dealing with inflation. So just be mindful of that. Yes, we have the tools to be able to come out of it quickly. But right now, there's just too much going on to think that this is going to end before all the other issues that we're currently dealing with. So we need some time for this stuff to play out, and then take it from there. So with all that being said, go ahead and drop a like button. Until next time, I'll see you guys later.